Hey, what's up, good people? Welcome back to Stock Up with Larry Jones. You already know not to fall for spam in the comment section, right? And you know if you're new, go ahead and hit the like, subscribe, and notification bell. You've been rolling with us for a while. Continue to share, like these videos, okay? It helps to keep me alive. So there's a lot going on. All of the major indices were down this morning. NASDAQ, S&P, Dow, because the question was, are we entering into the earnings recession? Is the earnings recession here? Well, the banks reported early this morning, and as a matter of fact, they were all down this morning, okay? And then they fought to rebound back during the day. So it's been yet another roller coaster day. Let's go right into it. As you can see, Bank of America, JP Morgan, Wells Fargo, which was down the worst and now it's up the most, and Citibank. Okay, so what's important is why. The question is, why did it rebound? And as a matter of fact, I'm going to go to my phone, so forgive the audio, and play why it actually rebound off of a bank's CEO's comments about the economy and us.
But we want to bring you some highlights from some of the comments happening from the C-suite of these banks during the course of either their earnings conference calls, formally speaking this morning, or some of the media calls that they've had with reporters earlier on today as well. We'll play first of all because the Bank of America conference call, formal analyst conference call, is still ongoing as we speak. But earlier on, Brian Moynihan, the CEO of Bank of America, did address some of the consumer spending trends that he's seen so far. Take a listen to what he had to say.
There continues to be a slowdown. Year-over-year growth percentage earlier in 2022 were 14% year-over-year. They've now moved to 5% year-over-year in the fourth quarter. So what does this mean? Well, that level of growth in year-over-year spending is consistent with the low inflation, 2% growth economy we saw pre-pandemic. They're also moving from services to experience, from goods to service and experience, and spend more money on travel, vacations, and eating out and things like that. That is a good for unemployment, but continues to maintain service side inflation pressure.
When you first looked at the report, all the banks were red, so it was triggering that, hey, we could be at the beginning because the banks were the first to start reporting. We could be entering into the earnings recession now. Remember, these numbers reflect Q4 of 2022. We are now in 2023. So something else that's interesting that is going on, and it's really interesting. It's two different markets going on at the exact same time, right? All of the meme stock are up. They're up bigly, as someone would say. Bed Bath & Beyond in the last 5 days is up 150% is what I really wanted to say. GameStop, I was wondering, these should be green. All right, GameStop is up 23% and AMC is up 28% in the last 5 days. Now let's look at the month. So look at where they are over the month. Let's look at the last 6 months. As you can see, AMC is down 67%. But if you got in the last 5 days, especially BBBY, which a lot of you have been asking me, what do you think? Am I, even with gains like this, which is just a gamble, right? It's just people piling in, a company, BBBY, that is heading towards bankruptcy is up 150%. Now, I'm just going to look you guys in the eye and tell you, in the past, I have made a lot of money off of stock like these, meme stock, whatever you want to call it. I've made a lot of money. Remember, anything I say is not a suggestion for you to buy, hold, or sell, but it's up to you to do your own due diligence. Me, myself, I'm not touching it because we're in a bear market heading towards a deeper recession. Even the banks think that there's going to be a recession. I'm going to play that at the end. Now, you say, yes, but it's up. Yes, it's up for the people that bought it when it was beat down. So my question to you guys is, a month ago when let's see here. This is what I'm going to say. And remember, I have some AMC. I have some AMC, right? And it's AMC that I have for a different cause. Let's just go to BBBY because I know a lot of people are going to be trying to get it now. Okay? My question to you is going to be, were you buying BBBY at $1 in the dollar range, right? Were you buying it here? Were you buying it when it crashed down here? That's what I'm going to ask you. And in the last year, my question is, were you buying it here? Because it may not ever get back up to $18. I doubt it is heading towards bankruptcy. And it definitely may never, ever get to $27, right? And the same thing with AMC, right? Let's go back to AMC. All right. So this is what I want you guys. This is the question that I want you guys to be honest and answer, right? Now AMC is down, right? So my question is, instead of chasing, if I was going to get in one, then I would get in the one that's beat down the most and not the one that is running up, because more people right now today will lose money with these plays than they will gain money. Yes, some people will gamble and they will make money. Absolutely. But this is a herd. This is a herd move. You have to be in before the herd gets here. And clearly you could see that the herd is already here for Bed Bath and Beyond, right? Now, someone's going to hear about it Tuesday of next week, all right? And they're going to treat it like it's brand new news. And the truth be told is they're going to get burned, because look at it now. Look at that. And this is how you could see Bed Bath and Beyond. When you put it here on Google Finance, it shows you what the other meme stock is. GameStop right there, AMC. I know Tesla doesn't belong in there. So as you could see, they are all on fire because people that see this are buying this and this too, because they're gambling. And it is a difference in gambling and investing. So now let's go into why banks think that there's a recession coming.
After the initial sort of absorption of the idea that was put out by JP Morgan and Bbby, so number 1 and 2 in the United States market share in banks and banking, and both saying that there's a recession on the way. So JP Morgan specifically saying that their base case scenario, their most likely expectation for this year, for 2023, is for a recession sometime in the fourth quarter, a mild recession, but a recession nonetheless at approximately 5% unemployment. And so the fact that they're both catching a bid now, I mean, maybe there's the expectation that a mild recession is, the quasi soft landing that people hope for. It's not so bad. I guess I would point to the other thing, which is, compared to a quarter or two ago, they weren't expecting a recession in 23. So certainly the arrow is a down arrow in terms of their expectations for this year deteriorating.
If we're looking, not that my heart bleeds for the.
So I just want to leave it right there, good people. You guys heard what the banks think. I think personally that the recession will happen before Q4. I think that we will start to see our way out in Q4. I think that the Fed will go up, of course, on February 1st in the FOMC meeting. I know live with stocks with Josh, when we talked about it, we discussed it. It's priced in 25 basis points is priced in February 1st as far as how high the Fed will go up with his interest rate hike. Okay. Now, I threw out there that he could be extremely hawkish and go up 50 basis points, though that's not priced in. 25 basis points is. Me personally, I am very, I'm not going to say positive, but I believe he will be neutral by April-ish. So meaning February, and then March with 2 more interest rate hikes. If he goes and just makes it 50 basis points in February 1st, that will be bad for the stock market. The stock market will go south, but then he does not have to raise again. If he goes 25 in February, I believe he has to go 25 in March. I believe he'll go neutral from there. And then I believe, unlike the bankers, and I know they have all of the data, I personally believe that Q4, we will start to see our way out, that the market will turn around. I believe that even if we're in a recession by Q4, then they're late calling the recession. I also believe that the stock market will bottom out before Q4. That's me. Now, if you believe that there's going to be an earnings recession, meaning some of these companies are not even going to report forward earnings, they're just going to stop saying what they expect, right? If you believe that there's an earnings recession coming, then you can make money if you know how to play options. You can just do a put on all of these earnings. For instance, had you did a put on the banks this morning, you would have made money had you, soon as the bell opened, you would have closed your positions. But as you can see, they turned around. So there's money to be made if you think a true earnings recession is coming. I'm not going to call those plays. They're very risky. But all I'm saying is that regardless of what goes on, if we do have a recession, I believe it will be light and short-lived. But I do believe it is coming. And I do believe that all of the stock market, especially the S&P, well, all the stock market, the entire stock market will be in a buy range within the first 6 months of this year. I know I may stand alone. These are bold predictions, but everything I see points to that. And if you have a stock that you plan on holding long term, including Tesla, if you think that Tesla is bottoming out, but you're waiting to hit a key level and you think it's bottomed out, then you should start DCAing in. Myself with crypto, I'm about to start DCAing in, though I am trying to wait until Q1 earnings of 2023. I may start. Josh may have convinced me to start DCAing in crypto. And if you are DCAing in crypto right now, you're doing fine, all right? But me personally, I would limit it to realistically less than 10% of your entire portfolio. I think you should have more in stocks than crypto. That's just me. So you leave me a comment of what you think of this year. When do you start, or when do you plan on buying? Myself, I am DCAing $10 a day. You guys know my portfolios, the Larry Jones $5 a day challenge. Check it out if you have not. Remember, Monday, the markets will be closed again in observance of Dr. Martin Luther King's Day. So we had 3 Mondays the market were closed within a month's time. Want to keep you guys fed and informed, all right? Sorry that it's choppy. I just wanted to talk about a lot of different things. And we will be going on from here. Make sure you check out the 2 links below. Make sure, I see a lot of guys are downloading Webull now because you are learning about the fractional shares and loving it. Set it and forget it. Your top 5 shares, it'll buy daily, weekly, monthly, however you set it, and you set it and forget it. That will be my second link below. That's Webull. And the first link, and remember, deposit $100, you're going to get 12 free stock on that one. The first top one will be Moo. Moo will be the top link. Deposit that. That's where we're cashing up, and we're going to be buying good companies in there. But right now, we haven't bought anything, no thing. And we're just cashing up right there. All right, good people. Sorry to be coming like a machine gun, but it was a lot to talk about, and it was kind of all over the place, all right? I will see you sometime over this weekend, all right? Live, love, laugh, learn, and earn.